Hello guys and girls, welcome back to my YouTube channel. Now in this video I'm going to show you on how you should do your analysis specifically on volatility 75 index so that you can get sniper entries whenever you are trading. Now I'm going to show you how we did analysis on volatility 75 index and how we got this massive buy trade right here, and this trade was shared on the Telegram group. If you have not joined the Telegram group yet, the link can be found in the description below. We can see we are still on a massive profits right here. So guys and girls, I'm going to show you step by step on how we got these buy entries, although it can be seen right here that this market was previously on a downtrend. So first thing is first, we as day traders, we must start doing analysis on the 4-hour time frame. So I will shift this market to the 4-hour time frame so that we can get a general picture on where this market came from. Now we can see right here on volatility 75 index, and we are on the 4-hour time frame. You can see this market was previously very strong on a downtrend or bearish trend. Now a lot of people or a lot of students on the Telegram group kept asking me, sir, why did you take buy entries? Well, this price clearly was on a very strong bearish movement. Now this is the thing that I want you to take a very deep and serious note. We can see right here this market, when it came to retest this previous lower high of this downtrend movement, it broke and it closed above this lower. To get a clear picture, let me first mark this lower high of this bearish movement and go to the line graph so that you can see clearly, because line graph always show proper market structure without any brokers manipulations, no weak rejections and whatsoever. So you can see here when the market did came to break this lower high of this bearish movement, it marked at the end of this trend, because we always say when the market is moving for example on a downtrend movement such as this, and the market comes all the way to retest to this previous lower high of this market movement and breaks, then it is said that this trend is over. Now a lot of people maybe did not notice this, because when you go to the candlestick graph, you can see it is not so much clear visible, but if you go to the line graph, you can see that this market clearly broke this previous lower high of this movement and it closed above. Now what happened is, this is some kind of liquidity that the market did make. Now this came to a conclusion that this previous downtrend movement of this volatility 75 index has come to an end, and what the market is doing right now is coming to this point right here, and this point is marked as a very high point of interest, commonly known as P or I, point of interest. So you can see right here we did mark this area as our point of interest, but again I told those guys who have huge capital to enter instantly on these areas right here, and the stop loss was above, or excuse me, was below this weak rejection right here. But most of people who follow my signals do not have much capital for them to have these huge stop losses, because mind you, we are on volatility 75 index and currently we are on the 4-hour time frame. So if you get your entry right here, just because this is the very high probable area for the market to keep proceeding, okay, you can see, but that should not make you to enter this trade right here, especially if you're trading under $1,000. So I'm going to show you on how you can get, or you could have got this entry right here on the lower time frame with the very minimum risk for you to use. And I will go first to the 1-hour time frame. Now on the 1-hour time frame, what we normally see or what we normally seek when we go to the 1-hour time frame is the shift of the market structure. And by the shift of the market structure, I just mean when the market breaks the structure, like the higher highs and the higher lows and whatsoever. And you can see right here on the 1-hour time frame, the market did came to this level right here and it formed this very important reversal candlestick known as the pin bar. Now for those who have been following my videos all the time, I normally say on the 1 hour time frame, I normally consider candlestick anatomy as my entry conferences. So here again on the 1 hour time frame, you can see after the formation of this candlestick, it did further confirm that this market is going to reverse to the uptrend direction. And again, the stop loss was on this same area. Only those people with huge capitals of above $1,000, I recommended them to enter this trade right away. But for those who are trading under $1,000, we got the entry on the 15-minute time frame. So make sure if you are under $1,000, make sure you go to the 15-minute time frame. Why? Because on the 15-minute time frame, that it is where we can get change of the market structure. What do I mean by the change? We can see this market previously was retesting, but the way it was retesting, we can see this was just a minor downtrend right here. So after the market came to this high probable area or very point of interest, we can see the market, when it was retesting to this previous lower high of this minor downtrend movement, it broke the market structure right here. So this told us that this market first, it retested very well to this point of interest, and once it went back up, it broke this market structure on the 15-minute time frame, showing us that this minor downtrend movement is already broken. And you can see here just beautifully how the market, after it broke, it came back all the way down here and it formed some kind of weak rejections. You can see market did form some kind of weak rejections. So this was other entries that we got, and you can see with a very minimum stop loss of just about not more than, you can see not more than even 20 pips right here. And you can see how the market is going all the way up. Now we can see how this market is moving on the 15-minute chart very beautifully. The market is continuously moving, obeying very good structure, and this is very rare on volatility 75 to see the market moving this way or obeying market structure. So guys and girls, I hope if you were on my Telegram group, this is the kind of entry that you could have got together. If you're not joined, the link can be found in the description below. Now I'm going to give you a general view on volatility 75 index, and I'm going to tell you that I'm hoping for a very long-term buy on this trade, because when you go to the 4-hour time frame, we can see that the market did form some kind of a very strong reversal candlesticks patterns. So by zooming on this pattern right here, can you tell me what kind, or can you tell me with your naked eyes, what kind of a pattern are you seeing right here? Well, if you answered a double bottom pattern, you are very correct. Now we know how the approximate take profit areas on the double top or double bottom pattern is, or on how it can be found. It is very simple. The distance between the neckline and these two legs is the approximate distance that the market must move, either at least 90% of it. So for those who are swing traders, we told them to wait until the market comes all the way at least to this level right here. But for those under $1,000 who wish to grow their accounts, they should close this trade and hope for another good entries, because the market doesn't move in a straight line. Before the market reaches this level, there are a lot of things that can happen here. A lot of things. The market may decide to come back all the way to this level right here before going to approaching our take profit, or the market can just decide to move on a ranging way right here, messing up with the motions before going all the way back up. So guys and girls, I hope I'm very clear. If there are any questions, please join my Telegram group, whose link is in the description below.